And Saylor is obviously the godfather, and he deserves a lot of credit. I mean, it's impressive that he's been able to acquire 650,000 Bitcoin. Like, that's no small feat. He'll figure out a reasonably safe way to monetize the largest public stack in the world, even if we haven't seen how that actually plays out. As someone watching Saylor cook, I mean, he was pretty aggressive, smacking the comment over and over and over again. And then he did like a false start where he's like, I'm not gonna keep hitting the comment. And then like 2 weeks later, he was like, no, I'm gonna keep hitting the comment and I'm gonna keep diluting you. As a Bitcoiner, you see why. We all feel the FOMO, always. Time is running out. I need to stack more Bitcoin. And that was definitely running in his head. You can both believe that it's a good 5-10 year play, and then also be like, I'm not gonna hold through him diluting the fuck out of me, and I'm going to sell now. And I'm going to buy back later once it's clear that he's not going to just keep hitting the comment to buy Bitcoin.
Hi, everybody. Tyler here. And today on Treasury Orange, I'm talking with Matt Odell. Matt is a Bitcoin-only venture capitalist and partner at 1031. 1031 have deployed over $100 million to Bitcoin projects. And Matt is also the founder of OpenSats that provides funding for open source projects advancing freedom technology. He's the founder of Bitcoin Park, which fosters a community of people building on Bitcoin. He's an advisor and investor in numerous Bitcoin companies and renowned educator in the Bitcoin space. Matt, that's a big resume. Welcome to the show.
Pleasure to be here. Thanks for having me.
You got it, man. So you've been building in Bitcoin, since long before it was cool, Matt. Is it fair to say that you're funding the next generation of Bitcoin builders? And what's the thesis behind investing in these Bitcoin-only or freedom-only companies?
Yeah, I mean, first off, with 1031, we started with the venture focus, but we're a little bit more broad at this point. We just try and we view ourselves as capital allocators to Bitcoin businesses, and we've deployed. As of right now, we've deployed a little over $200 million across a variety of private Bitcoin businesses. The thesis is relatively simple. Bitcoin is an apex asset. We live and breathe Bitcoin. We've lived and breathed Bitcoin for over a decade now, our partners, myself included. And we believe Bitcoin is greatly undervalued. And I think there's if you probability weight it, there's a decent likelihood that Bitcoin becomes the reserve asset of the world. So with all of that said, the businesses that are building on top of Bitcoin and are building profitable cash flowing businesses, then stacking Bitcoin to their treasuries should be the most profitable businesses in the world. And so we are at the ground floor there. We work with the founders, we help them build out their visions, and we guide them through the process to, hopefully grow into the most valuable companies in the world.
That's really cool. I love that you've kind of got that long-term vision, and you see that Bitcoin is going to become a global reserve asset. I think that's a view a lot of Bitcoiners share, certainly. What has been the evolution of maybe the Bitcoin startup space since you've been working at 1031 to build out these companies?
I mean, it's fascinating just being on the ground with the founders. I mean, here's the thing. First of all, our founders are all diehard Bitcoiners. We're diehard Bitcoiners. We all, founders, ourselves, my partners, we're all holding the majority of our net worth and savings in Bitcoin. And so we look at how can we provide a mutual beneficial relationship to Bitcoin, the asset, and Bitcoin businesses, right? And so a lot of the businesses we invest in are focused on Bitcoin being better money and Bitcoin being a better asset. I say that because there's a beautiful circular feedback loop. As Bitcoin becomes more useful, as it becomes easier to use Bitcoin, the actual asset should also accrue value over time, right? And these companies are holding Bitcoin, we're holding Bitcoin, our investors are holding Bitcoin. And for Bitcoin to be good money, you need to be able to spend and save it without permission. So when you go at it from that thesis, there's a bunch of different use cases that you can imagine that if Bitcoin is the base of a global distributed financial network, that Bitcoin will be used for, and that companies providing valuable services will be able to profit from. But there's also the aspect that you have to think about with adoption and where we are at the state of adoption. So we've invested in 35 companies. the majority of the money we've deployed has actually been maybe in 5 or 6, and it's intentionally weighted probability-wise. So right now, what we're looking at is the most profitable businesses are buy, sell Bitcoin and other financial services on top, right? So we're the largest investor in Strike. We're their largest investor. It's our largest investment. Strike, their main product has been buy, sell Bitcoin. They charge a very reasonable, transparent fee on top. And they've recently added loans, which have been incredibly, like the demand for them has been insane. Just Bitcoin collateralized loans. So people can take dollars out basically without paying cap gains tax. That's the use case. The rates are a little bit higher than people might expect. We're trying to drive those rates lower, but they are lower than cap gains tax, which is why we've seen very heavy demand without much marketing. We're one of the largest investors in Unchained. Unchained has been doing Bitcoin collateralized loans for a while. And then they kind of went from the opposite side. They started with Bitcoin collateralized loans, and then they added buy sell. And to me, as someone who's been very focused on Bitcoin as freedom money, I mean, it's a little bit of boring product, but that's where the market is right now. And then so we use that to basically juice our returns to then fund smaller checks into projects that I would say are farther off along on the adoption curve, but as a result have very low valuations and could, give us asymmetric upside, could give us significant returns in a 10-year horizon. And that's things like Start9, right? Start9 is a home server that you can run a Bitcoin node, but you can run pretty much anything you run in the cloud, you can run on the Start9. And they're almost at profitability, but really that's, a 5 to 10-year play compared to something like Strike that is been profitable for the last 5 quarters and just like minting Bitcoin and putting it on their balance sheet.
Yeah, interesting. With someone like Strike or Unchained, it's easy to see how, being a profitable business, it makes sense for them to stack as much Bitcoin as possible when you believe in Bitcoin, the asset. How do you balance that with the early growth companies? Because I think famously a lot of startups just burn through cash, right? How do you, hold that delicate balance between adding Bitcoin to their balance sheet versus, just giving them fiat to spend to build out their product?
Um, we're very different. The founders we invest in and our philosophy is basically the exact opposite of like the easy money tech VC philosophy, which is what you just highlighted, which is burn cash for growth, maybe in 15 years turn on profit drivers. Even if they're not profitable right now, like the play across the ecosystem, the successes that we've seen is you have to be as lean as possible. You got to reduce expenses as much as possible, reduce burn. Your opportunity cost is Bitcoin. So if you were burning a bunch of money a year ago, I guess we're kind of flat on the year, but 2 years ago, basically that burn cost you double as much today because you could have held Bitcoin instead. So it doesn't matter if you're a small company, if you're a big company. I think the play is, and this is what we've seen success in, is the play is to be as lean as possible, keep your employee headcount as low as possible, keep your marketing spend as low as possible, only spend on necessary things. And that's not to say like you completely dismiss growth, but it should just be reasonable, cost effective growth strategies and try and hit profitability as soon as possible. Because if you wait 10 years to be profitable, the price of Bitcoin should be substantially higher at that point. And you're going to get way less Bitcoin for it. So you want to get to profitability as soon as possible. And then the last but not least is the funding environment in Bitcoin is based on that aspect, right? Our investors, the people that invest in us, we have some institutional investors, we have high net worths, but even on the institutional side, like their investment committees are Bitcoiners. So they're weighing it themselves, right? Like if you're a university endowment, you could go out and buy 5,000 Bitcoin. Do you buy the 5,000 Bitcoin or do you invest in early stage startups? Now, what we see is they mostly wait on the Bitcoin side and they take a reasonable risk adjusted bet on the startups. But my point is the money is much tighter across the board. You don't know if you're going to be able to raise another round at some, ridiculous valuation next year. So you have to protect yourself. You have to protect yourself and keep yourself lean.
Cool. That's some cool perspective, kind of understanding the VC environment in Bitcoin and how it's different. So Matt, you've seen multiple cycles. I'd say I kind of came of age in Bitcoin in the previous cycle, 2020, 2021. Everyone says this one really feels different with the Bitcoin Treasury phenomenon here at Treasury Orange. When we say Bitcoin Treasury companies, we obviously mean the more pure play companies, maybe not the ones that 1031 is investing in, certainly, ones that are following the mold of Michael Saylor's strategy. So how do you view that whole phenomenon? And um, do you think the institutionalization of Bitcoin with the ETFs and some more traditional finance plays happening is making this cycle feel a lot different?
Yeah, I mean, I think every cycle rhymes, but they're all different. They've all been different. And the mistake a lot of people make is, you see the similarities and you say that's how it has to be. But there's also always been differences. And the last cycle was dominated by FTX, then FTX blowing up. The cycle before it was dominated by like the ICO boom of 2017, which people forget about. That was kind of led by Ethereum's ICO at first. And this one has been very much dominated by these public, leveraged Bitcoin equity plays, similar to the strategy play. And Saylor is obviously, the godfather of that. And he deserves a lot of credit. I mean, it's impressive in the amount of years that he's been able to acquire 650,000 Bitcoin. Like, that's no small feat. And he's obviously looking at the same fundamentals that we're all looking at, which is on a long enough time scale, Bitcoin should be substantially higher in purchasing power and price. And he just he clearly is kind of making it up as he goes along, but the ultimate goal is to accumulate as much Bitcoin as possible. Everything else be damned and not get wrecked in the meantime, which in general has been the thesis that wins, right? It's a game of survival and you want to acquire as much Bitcoin. I do think it's mostly a short to medium term arbitrage play, just where we are at Bitcoin's adoption. And I think he probably realizes that as well, even if he doesn't say it. I mean, I think there's like an undercurrent, for instance, that people think, he'll figure out a reasonably safe way to monetize having, the largest public stack in the world, even if we haven't seen how that actually plays out. And so I think a lot of people got over their skis on the copycats, the much smaller ones. I just don't think there's that much room for it, both time-wise and capital-wise. There is some kind of efficiency of scale that's hard to measure of being the largest one, being the first mover. But I think long-term, what we see is people are going to look back, and it's not going to be the most valuable Bitcoin companies, excluding strategy, are not going to be the ones that are playing financial games to lever up relatively safely and buy Bitcoin without cash flow. I think it's going to be the opposite. It's going to be something that you see like a Google. Probably won't be Google, but a company like Google that's pushing off a ton of cash and just stacking Bitcoin with it, like actual profitable businesses that are stacking Bitcoin with their profits rather than loading, or like an Apple, but rather than loading it into cash and treasuries, they load it into Bitcoin to supercharge their businesses. I think that's probably going to be the model, but it just goes to what I said earlier. It's where we are in the adoption cycle, right? Saylor saw an opportunity. He was able to get out in front of the ETFs before the ETFs even existed. Obviously now financial markets have access to spot relatively easy through BlackRock and others. That didn't exist when he first started. And I wouldn't be surprised, and I know this is like harem, maybe that's the wrong word, but it's like, it's a relatively contrarian opinion. I mean, in analyzing strategy, but I think ultimately he's going to add some element of cash flow generation to that business. It's probably just a little bit too early for that right now, and he wants to be a little bit more pure play.
Yeah, totally. That's something I think, it's as someone who has invested here and there in some of the more pure play Bitcoin treasury companies, certainly strategy with the greatest size. I do want to see, a cash flowing business behind it. You alluded to maybe a Mag 7 company eventually adding Bitcoin to their balance sheet. I think that's important. But I have heard some of the recent kind of spin up Bitcoin treasury company executives talk about how they want to build digital credit by kind of doing a copycat of the preferred equity route. And I think you and I will probably agree there's not going to be a lot of winners in that space because there's just not room for that, like you said. But I think it was Matt Cole of Strive who was saying he wants to have basically the leanest and smallest cash flowing business so that they can really focus on the financial engineering aspect. He didn't use those exact words, but that was my read of it, certainly. Do you think that's a sustainable model for some companies? But do you think that's what maybe Jack's going to do with 21, or are they really more focused on building out a sustainable cash flow generation machine?
Well, I mean, I think the good example is actually the other Jack right now, because they're already in public markets. You know, Mallers is waiting for his SPAC to finalize and that deal to close. Um, and I'll base it off of his public comments, um, that, you know, he is very focused on cash flow generation. But if you go to Dorsey and Block, they're in the S&P 500. They're clearly trying to build a profitable Bitcoin business that is vertically integrated across the stack, right? Hardware wallets, mining, point of sale. And then they have a policy of stacking a portion of their Bitcoin profits into Bitcoin. Um, as I said, they're trading the S&P 500. Like, that's probably going to be at scale the more successful models that we see, excluding strategy. Once again, like, I'll exclude
Hmm.
strategy from this theoretical because they have first mover advantage. There's a huge stack, and maybe, you know, there's creative, once you have that kind of a position size, there's ways to attempt to monetize it separately. But it's a really interesting example here, right? Because Block is not valued by the market very highly if you compare it to something like a strategy, right? Strategy has been the darling. Block's chart over the last 2 years does not look very good, to speak kindly about it. But long term, I think it probably plays out in Block's favor pretty well. But that's the model that I'm looking at, right? That's the model that, like, a strike going public, it would look more like Block than it would look like strategy. It would probably be, you know, significantly more profitable in terms of employees by head. I mean, I think Strike is at like 75, 80 employees right now. It's available in 101 countries, and Block has like 10,000 plus employees, right? It's kind of the old model. They're not very lean, but I think that's where we're going. I think we're going cash flow heavy, aligned Bitcoin businesses that stack to their treasury. And I think Block is kind of leading the way in public markets on that front right now.
Yeah, how important do you think it was for Dorsey to roll out Bitcoin payments for all their Square merchants, in this current quarter? Obviously, I don't think we're going to see massive adoption of that straight away, Matt, but how important do you think that is for eventual Bitcoin adoption to get merchants on board? And do you think we see other merchant processors follow that model in the future? How close are we?
I mean, look, I think as a Bitcoiner, it's incredibly important, right? Like, if you live on a Bitcoin standard, like my family lives on a Bitcoin standard, I would rather spend Bitcoin directly. If I'm not spending Bitcoin directly, that means I have to convert it to dollars, put it in my bank account to do our monthly spend, right? So anywhere I can spend Bitcoin directly is a win. So I think narrative wise, I mean, first of all, I think use case wise, as a Bitcoiner, it's incredibly important. I think it increases the utility of Bitcoin. I think narrative wise for the company, for Block, it's incredibly important because it solidifies them as a premier publicly traded Bitcoin focused business that's in the S&P 500. I think business model wise, like, it's not going to be a major profit driver for them for maybe 5 to 10 years. Like, to go to my earlier point about how 1031 views the ecosystem in private markets, this is how we're valuing things in private markets. If someone comes to us and pitches us their great idea for processing merchant payments, there's not much profit to be made in the next 5 years. If they come to us with a novel way to offer buy sell to people, there's a lot of profit there. And as I said earlier, we use the proven business model of buy sell and loans to then subsidize future value stuff, including payments. And that's basically what Block is doing internally, right? Like, their main Bitcoin revenue driver is buy sell, will continue to be buy sell. They clearly, from public statements, want to start offering loans, so they see the value in that. Square already does non-Bitcoin small loans, so it's right in their wheelhouse. But then they use that to subsidize basically the payment processing stuff. Like, I don't think there's real money to be made on that right now.
Who do you think is the best use case for those Bitcoin-backed loans right now? Is it someone living on a Bitcoin standard who needs access to fiat to live their life because it's hard to spend? Is there an institutional use case for that or business use case for that, Matt?
I think there's definitely a small business use case for it. It's basically anyone who's sitting on significant Bitcoin paper gains, like I said, that wants to circumvent the relatively high cap gains tax, whether they're in America. Some other countries have even worse than us. And then depending on the state, if you're in America, you get a significant state cap gains on top of that as well. I mean, as someone who's actually used the product, first of all, as a Bitcoiner, I think it's incredibly important that you're very conservative with your risk management because Bitcoin's volatile. This is a marathon, not a sprint. The overwhelming majority of people well, maybe not the overwhelming majority of people, but a lot of people have gotten wrecked over the last 15 years of Bitcoin because they weren't humble enough. And there's a selection bias, right? Like you see the winners on Twitter and whatnot, but all the people that got wrecked and lost everything, you don't see them, right? You only see the rosy picture. You see the survivors. So I think it's important to remain conservative. But compared to interacting with like traditional banks or traditional loan products, the ability to just easily get liquidity and capital without triggering cap gains, without a credit check, and it's within like 5 minutes. We don't do a credit check at Strike, but we require a 50% LTV. So you basically have to put double the amount of collateral that you're going to take out. And that's because we don't want people to get liquidated. It's better for us if our customers aren't liquidated and they're paying fees over time, right? They're paying their interest rate over time. So we force 50%. But with that said, with that main caveat, which is that it's incredibly over collateralized, if you want to take out $1 million loan, it is quite complicated in the traditional system to get $1 million worth of liquidity. If you have $2 million worth of Bitcoin, you can get $1 million in your bank account in 5 minutes with Strike. That offers a lot of utility to people, and we've seen significant demand for that product. And so you can see that as an individual. Maybe you're trying to pay for your kid's college or something like that. Maybe you need a car or a down payment for a house. But we also see it on the small business side. Maybe you need to install new refrigerators or something, and your business is holding a Bitcoin treasury. You're able to then really quickly get that liquidity and use it to further enhance your bottom line at your business.
Yeah. Where do you think we are in terms of being able to get better duration on those types of Bitcoin loans? Is it just a matter of time, as we see Bitcoin mature, and maybe is it going to require banks understanding Bitcoin better who are kind of helping back some of these loans, or is it going to take reduced volatility in Bitcoin underlying, or how do you see that, Matt? I guess the reason I'm asking that is because obviously we can see for a high net worth individual how that makes sense, especially if you're largely over collateralized. The duration risk is less of an issue. But I'm thinking more of like someone who maybe has a handful of Bitcoin who may want to kind of get access to some of that capital. Is that someone who should just stay away from these types of loans because of the volatility and duration? How do you view that?
Yeah, I mean, I would go like first off, like the number I like to say is like you should not. It should be less than 5% of your stack size. That way, like you can withdraw an 80% drawdown, and that's probably overly conservative, but that's just how I think about it. Obviously, Strike can't enforce that. Like we don't know what your stack size is. We don't want to know. We can't know. But if someone asks me, I say less than 5%, and they should treat that accordingly. I think the two biggest issues we have right now as an industry is duration. So right now the standard is a 1-year loan. Now at Strike, we do no origination fee and no early prepayment fee. So you can refi whenever you want. You can continue to roll it over. But obviously there's some trust in us as negotiating the liquidity provider relationships that will have liquidity when your loan comes up that you can actually roll it over, right? Like people want 5-year loans or 10-year loans. So that's an issue we have. And then the other is rates. And in both situations, it is a disconnect between liquidity providers, so the people putting up the dollars for a return, and their understanding of Bitcoin. Because an over-collateralized Bitcoin loan is actually a fantastic way to generate interest on your dollars because you have very little to no risk of default. It's instantly saleable, 24/7, 365, incredibly liquid, and over-collateralized. So for instance, if I put my Unchained hat on, during the FTX fallout, where everyone was getting absolutely wrecked, and we saw lenders go down left and right. FTX, BlockFi, Celsius, Barry Silbert, and all the GBTC stuff. They were all getting absolutely destroyed. Not a single liquidity provider on Unchained had any loan losses. Now, Unchained users that took on too much risk and couldn't cover the margin calls got liquidated, but the actual providers of the dollar liquidity didn't face any loan loss because it was over collateralized, instantly saleable and liquid and whatnot. So as the market starts to realize that, what we should see in practice is we should see the rates being the lowest possible rates you could get across all loan products, not just Bitcoin, right? Over collateralized Bitcoin loan should have the lowest rates, period. And you should be able to get higher durations and better terms. You should just have the best terms possible if you're doing over collateralized Bitcoin loan. And that's part of the education we're doing on the strike side. And I will say that, especially with Jack entering public markets, especially with the partners that he has there with Tether and SoftBank and Cantor Fitzgerald, Strike is in a very unique position, and an increasingly larger loan book is an increasingly better position to basically negotiate those terms on behalf of users, right? Like Jack and his team are going to these liquidity providers and saying, we need the rates lower, we need the terms better, we need the duration longer. And I think it just, the short answer is it's a time thing, right? It's going to take a bit of time, but I think it's probably on the shorter end than the longer end. Like in the next 5 to 10 years, Bitcoin backed loans should be the best terms you get out of all lending.
Yeah, I'm really excited to see, how Stripe kind of navigates that in the coming years, and if they go public, or, if there's a merger in place. I know you can't talk about that type of stuff, but as an outside observer, I'm really excited about that, and I've been a user of Strikes as well. So plug for that, certainly. We've talked about Microstrategy a little bit, or Strategy, Michael Saylor's company. Obviously, it's incredible the amount of capital he's been able to raise over the last 5 years, but really even 18 months to buy Bitcoin and add it to his company's balance sheet. Obviously, sentiment over the last 5-6 months has been pretty horrible, both in the larger Bitcoin treasury company space, but definitely towards Strategy as a company. Is my tinfoil hat on too tight? Is there a bit of a targeted attack coming at Strategy? We saw coordinated short selling that was really public on Twitter. Banks increased their requirements for margin on holding Strategy. We've seen the S&P rate Strategy and completely discount their Bitcoin holdings. You've got Morgan Stanley's MSCI, who's talked about delisting them from some global indices. That's a lot of factors moving against Strategy, I think, all at once. Do these institutions just still not get Bitcoin? Is that, the Occam's razor kind of explanation, or is there some sort of coordination, do you think, Matt?
I think it's probably mostly the latter. I mean, look, I think as Bitcoiners, a lot of us, both ideologically and in practice, view Bitcoin as a safe haven, risk off asset. But most allocators still very much put it in the risk on bucket. And we see that in the market. Like it's clearly being priced as a risk on asset by most allocators. Even like what Google's on a tear, Nvidia's on a tear, the Mag 7's on a tear, gold, which is historically a risk off asset, is on a tear, silver's on a tear, and Bitcoin's down 40% from all-time highs right now. So it is being treated even more of a risk on asset than the big tech companies that have, huge valuations. Now, so I think you definitely have that aspect. And obviously if you add leverage to that play, which is what Strategy is, then it's even more of a risk on asset, right? And this is something that Saylor's even talked about in the past, right? It amplifies Bitcoin returns, right? Like he's implying that he's adding more risk to it. He is adding more risk to it. So that should definitely be a part of the equation when people think about this stuff. Are there some people that are out there that have influence that don't like Saylor? Probably. Like he has a lot of enemies. I think Bitcoiners in general has always been with Bitcoin. It's been an upward battle of recognition and respect, right? Like we've always been the less respected people at the table. And that, I kind of like that position. I think Saylor kind of likes that position. On the JP piece specifically with margin requirements, I can see how people could read that as dirty of them increasing margin requirements, but also JP historically has, they've always tried to be the conservative people in the room and take calculated risk. And maybe they helped cause, the recent downturn in strategy, but you can also look at it from the opposite side and be like, when they added margin requirements, I don't know what strategy's down from since then, but I think it's like almost 70%, if not higher. And could have been, in hindsight, you can treat that as like a really good risk position that they took, right? Protecting themselves. And they didn't want their clients to have too much leverage on this thing. So, I mean, I don't pretend to have a crystal ball. I don't know. And then the opposite side, right? Like just as someone watching Saylor cook and do his thing, I mean, he was pretty aggressive smacking the comment over and over and over again. And then he did like a false start where he's like, I'm not going to keep hitting the comment. And then like 2 weeks later, he was like, no, I'm going to keep hitting the comment and I'm going to keep diluting you. As a Bitcoiner, you see why, right? We all feel the FOMO, always. I live in FOMO. I've lived in FOMO for a decade. I don't have enough Bitcoin. I need more Bitcoin. Time is running out. I need to stack more Bitcoin. And that was definitely, running in his head. I need to acquire more Bitcoin while I can. But there's, some of the responsibility has to fall on his foot. I think that he kept hitting the comment. He kept hitting the comment. Then he releases the preferreds and he's like, oh, I'm going to stop hitting the comment. Then I have to hit the comment to pay the dividends. But then I'm also going to buy Bitcoin with the comment. And then today I'm going to sell comment to buy cash. Right. So, hindsight's 2020. Maybe he should have stopped hitting the comment. Right. Maybe he should have let the market digest a little bit, not acquired as heavily, but where we are right now.
Yeah.
It's hard to like you look at it, you're like holding strategy stock. And it's like, okay, like you can both believe that it's a good 5-10 year play, and then also be like, I'm not going to hold through him diluting the fuck out of me, and I'm going to sell now, and I'm going to buy back later once it's clear that he's not going to just keep hitting the comment to buy Bitcoin.
That's right. I think these things are always kind of like a confluence of factors. You could have had all these negative things happen with regard to strategy, but if he didn't dilute as much, maybe we're not in a place where strategy's down 50, 60, 70%. So, Matt, you talked about the market still viewing Bitcoin as a risk-on asset. If you're a Bitcoiner, I guess you view it as risk-off, certainly. For you personally, when was that light bulb moment of when you said, Bitcoin isn't a risk and I want to accumulate as much of it as possible? And does traditional finance coming in with the ETFs and maybe a little bit more of an embrace of Bitcoin as an institutional asset, does that de-risk it more in your mind, or is that not matter? Is that inevitable in your mind, I guess?
No, it 100% de-risks it more. I mean, and having like, I don't think the US government could kill Bitcoin, but the single biggest threat to Bitcoin, and especially to American Bitcoiners, where the overwhelming majority of capital is domiciled, um, has been aggressive anti-Bitcoin administration government. So the combination of the ETFs and the fact that Trump ran and won on a Bitcoin platform, regardless of the fact that besides Ross being free, we haven't really seen much materialize out of it, besides the fact that the government's not just actively throwing us in gulags, right? It's like not actively going after us. Obviously, we see the Tornado Cash case, the Samurai case, but those were holdovers from the Biden administration. Hopefully, we see Trump come out with pardons for them and kind of try and rectify it after the fact. Having an incredibly negative administration last 4 years, and then having a positive administration plus institutional adoption where BlackRock is making money off of it, where you have ETFs, where you have real allocators coming in, has incredibly de-risked it to the point where the risk reward for buying Bitcoin right now is probably the best it's ever been. It's hard to measure that, but from my perspective, it looks like it's the best it's ever been. Now, I mean, my personal journey, I grew up in the 2008 financial crisis. Like I saw all the adults in the room have no idea what the hell was going on and running around with their heads cut off as that all happened. At that time, the greatest bailout of all time to bail out the banks, which looks like a drop in the bucket compared to what's happened since. And then 2013, the Snowden leaks happened. So I was like, you can't trust the banks. You can't trust Treasury. You can't trust anyone in charge of our financial system or have any kind of influence in our financial system. But I was like, we can trust the big tech companies. And then 2013 happened, and I was like, oh shit, you can't trust the big tech companies. And I was getting into Bitcoin around the 2013 Snowden leaks. And so I looked at open source money, not controlled by anybody. It solved both problems. And as a young man growing up, it's what gave me hope, right? It was like, oh, this is something actionable that can actually better my life, and then later on, better my family's life and better my children's lives. And I can focus my time and attention on that. And then so that's where I kind of came out with Bitcoin. Also, I think a lot of people's conviction gets built in bear markets. 2015, I basically got into Bitcoin, just immediately got wrecked on paper. It's just like 2015. People don't realize the all-time high of 2013, we didn't broach it again, I think, until maybe it was late 2016 or early 2017, but that was a long period. And that wasn't, Larry Fink on CNBC shilling his Bitcoin ETF. That was, people are like, you're an idiot. You're a young kid. You'll be an adult one day and you'll realize that you were wrong, and you'll learn from your mistakes, and Bitcoin will be at zero. And that builds up the conviction, because if everyone's telling you you're wrong, you tend to do the research, you tend to improve your skills. So like the one thing that I would add, like, it's hard to view Bitcoin as a safe haven, as a risk off asset, unless you actually build your skills on using Bitcoin and how it works, and holding self custody, and how nodes work, and how mining works, and sending it between yourself, and being able to actually use it as permissionless money. If you're viewing it as something that you see in your Charles Schwab account, and looking at the volatility, on a month-to-month basis, like, it's very easy to group it in as a risk-on asset, and miss out on the safe haven aspects.
Right. Yeah, I can attest to that. I mean, when I first bought Bitcoin through a couple cycles in the 2010s, I didn't understand what I was buying. I saw it as a meme, and like you said, I kind of saw it as a proxy for my brokerage account. I traded it profitably. I didn't go through the downturns, but as a result, I have way less Bitcoin than I would have had I just bought and held, right? So that's, I think, an important lesson. And yeah, start using those tools right away. I think it's something we can definitely tell our audience is self-custody that Bitcoin. Start off small, because holding a bearer asset, really does change the game. Matt, you talked about kind of the political risk to Bitcoin. Now, obviously, the United States was on a hard money standard prior to the advent of the Federal Reserve in 1913, yet we still moved into the fiat regime. Do you think if Bitcoin does become what we think it is, and is a global reserve asset, countries aren't actively attacking it, and maybe they're backing their own currencies with it, or embracing it as a sovereign asset, does Bitcoin fix the political? How do we prevent from moving back towards this era of fiat, if we can ever get there?
Centralized systems are the easiest to scale, and humanity throughout our existence has relied on centralized institutions to scale our productivity and scale our societies. And those are not going away. I mean, when you have centralized institutions, you obviously have room for corruption to come in, because there's humans in charge. And when the humans are in charge, corrupt ones will rise to the top, and you just follow the incentives, and they will line their own pockets at the negative of everyone else. So there will still be corruption. Bitcoin promises a financial system, a base financial system that is corruption resistant. Everything else around it can still be corruptible, but at least the actual value system, like the system that is tracking your wealth and your spent time, you spend your time, you work hard, and you effectively store that time in something. Right now, what people store that time in is a heavily corrupted centralized regime, right? With Bitcoin, at least they'd be able to store it in a corruption resistant store of value that increases in purchasing power over time. They don't have to become a stock picker. They don't have to become a financial specialist and spend time on that. They don't have to hire someone that is, and have a diversified portfolio of stocks and whatnot. They can just work hard, save in Bitcoin, pass it on to their kids, use it when they need to. And I think that makes the world a significantly better place. I think it makes the world more efficient. I think it will lead to more human flourishing. All along that, there'll still be corruption and centralized institutions that require trust and whatnot. And that's fine. I think we can tangibly make the world a better place, though, if Bitcoin is adopted at scale. And we're basically watching that process play out.
Yeah, I think that's a great place to leave it, Matt. Where can people follow you and your projects online and leave us with any parting thoughts you might have?
So I left Twitter, I left X, but my personal website is odell.xyz. 1031's website is 1031.xyz. That's spelled out TEN numbers 31.xyz. And the 1031 account is still on X if that's where you prefer to follow your news. That's just at 1031 funds.
Great. And one thing we have all our guests say before they leave, Matt, is stay orange.
Love it. Stay orange.
Ladies and gentlemen, the Bitcoiner whose mission it is to fund the people and the projects that will orange pill the world, Matt Odell.
Thank you, sir.